GKFX Prime presents the Market Analysis Webinar. Hello everybody, welcome to this weekly webinar. I believe this is the 4th edition we're on now, so I hope you guys are getting some good use of this, and if you are, please make sure to click the like button or the subscribe button wherever you're watching this, and of course we always welcome some comments on the videos. Plan here, as usual, is to go through some of the major Forex pairs and also touch on a couple of commodities and the stock market. So let's just start with the euro dollar and remind ourselves of the big picture first, as always. This is the weekly candlestick chart, and it has been very volatile. So last week, if we zoom in here, this was our weekly candlestick chart. This was the massive rally in the dollar that we had, but look at this huge snapback that the euro had last week. So very volatile markets, and one of the conclusions that I'm coming to is that for regular swing positioning, it's actually better to almost skip the daily chart at the moment because there's not too much to be told from this. Huge swing down, huge swing back up again. What you can generally conclude is that there are some big trends, but they're happening on a smaller time frame, and that on this level it's very much just a huge choppy range, which is quite difficult to trade. But if we drop down to our 4-hour time frame, you can actually start to see there's a little bit of logic to the madness now. Here we had a pretty defined downtrend. We came down to this 106.50 support. We put in a double bottom, broke through the neckline, little false break to start with, but held above the support, rallied up, hit the old previous support, went through it, hit the old area of support there, pulled back to this one, and we rallied up again. So I think as we currently find ourselves, what I would have been looking for, based on this pattern of rallying up, hitting the old support and pushing to the top side, characteristic of an uptrend, is for us to have pushed up towards the 112. That would have been the next natural pullback area, the next target upside area. But it looks like we haven't quite got there, and we're rolling back through this level here. As you can see, we're retouched here. So we're okay for now. We're making a higher highs. We're still making higher lows, just about. But I think if we do drop back through the 109.50 level, then potentially we're potentially this rebound, this huge rebound that we saw on the weekly chart, potentially it's come to an end and we're rolling back over into a period of euro weakness. If we get back through the 110.50 level on this top side here, then I think we're resuming, and hopefully we can actually go up and target the 112. And then 112 is our next critical level. Above there, we can actually start to think about hitting the 114s, which, if we remind ourselves on the weekly level, that was where we had that big false breakout. So the question mark is, was this the last gasp of dollar strength, and the euro is now beginning this breakout to the top side that we thought was happening here? Or is the euro rolling over, and are we actually going to target, if we pull out a little bit, these 105 levels down here, which is the really big support area? So I think the Forex market is still making up its own mind right now. The backdrop to this, from my perspective, is that the markets are very worried, obviously. The dollar was thought of as the big haven asset, so a lot of people were pulling out cash from stock markets and looking to turn them into just cash dollars. But the Federal Reserve introduced a series of really easy monetary measures, almost specifically intended to weaken the dollar. So they're the two competing forces, just the natural desire for cash and dollars versus some really big efforts from the central bank to try and actually weaken the currency. So they say don't fight the Fed. If that's true, then we're looking at a period of a weaker dollar and stronger euro. But let's see how quickly that can come about, if indeed it does. So let's switch gears to the pound. Another absolutely epic rebound here. So if we pull ourselves out a little bit, we can actually see that people have different levels here. This was the flash crash, if you remember, not long after Brexit. The pound flash crashed down to, most charts have the similar to this, around 115, and indeed that is where we've just retested. So potentially a huge long-term double bottom in place, or potentially the beginning of a big new downtrend if we break 115. But from what we can see so far, this downsloping trend line through the lows and the fact that we seem to be just about holding on to the 30 level on a weekly RSI, to me would suggest that actually there's a good chance we've put in a base for now. And again, it's a story of potentially a new period of dollar weakness, because that really was a very strong rebound, even stronger actually than the euro, because you can see that was the two big weeks with dollar strength, and actually last week we actually unwound all of that previous weeks, and we actually closed the week above where we started the prior week. So that's quite significant. So again, dropping down to our 4-hour chart, this is how I'd see things. A similar thing, put in our double bottom here, little false break to the top side, but still held above the 115 mark, rallied up, came into a little bit of congestion near 122.50 in this area of congestion here, but managed to rally up again, hit this previous low here. We've pulled back to that 112.50 and obviously 120, so 122.50, and that is exactly in the middle of 120 and 125. So we just pulled out, if you talk about that 500 pip gain that we've made here, then we've pulled back half of that. But at the moment, this upside rally still looks good. As long as we hold above this 122.50, it looks like we can continue pushing to the top side. If we take this out to the downside again, then maybe we're coming down for re-challenging 120 again, which would be quite normal. If we were actually putting in a bottom here, we've rallied pretty strongly out, so maybe we come back for the retest. And then we have to reassess again at 120 and this kind of double bottom neckline here, whether we can return to the top side or break lower. For the time being, this uptrend looks okay, but bear in mind we did hit this 125 big level, and we got a little bit overbought on the 4-hour RSI. Switch gears to dollar yen. So this is the 4-hour chart, but let's get some context again. So a huge rebound here in dollar yen. A slightly different idea from the other charts in that this is the dollar recovering right off those lows, and then what we just experienced last week, a bit hard to see here because I've got some lines in, was the yen pulling back again. But we have seen a huge move off the lows of dollar strength, and then this is the dollar weakening last week in concert with those other currency pairs, but not quite by the same degree. We didn't actually, you remember in the pound, the pound rallied to a point where we actually undid that previous week's dollar gains. In the dollar yen we haven't. So this potentially more a picture of dollar yen recovering. And remember that the yen is the bigger haven currency typically thought of in Forex markets than the dollar. So they're both sort of competing to be a haven currency here. Hence, it's quite a range-bound chart. And again, hence, I think it's better that we move down to these shorter time frames. And you can see that we had this big, nice rally here, actually, that on the 4-hour chart was quite well defined. And we pulled back to the 107 level. And then we consolidated, we've pushed back through 108, and you can see that was the big move higher. We corrected and potentially now we're coming out of that correction. And if this is anything to go by, we've had support, tested the resistance, now broken the resistance. If we can hold that again, basically hold the 108s, then maybe we can actually get some more upside here, and this previous uptrend can resume. So this is going on the basis that actually we're more likely to, having had a big rally off the lows, we're more likely to try and re-challenge this big 114 level up here than revisit those lows again. Switch gears to the Aussie. Again, sharp downtrend, obviously, on the weekly chart. But again, a story of quite a big rebound, and this was something we mentioned the other week, the strength of the rebound off the lows here in the Aussie. Again, I can kind of pull us out a bit to get some context here. Actually, almost needs a monthly chart. So we didn't quite get down to those lows, and we've had a good rebound off the 55 level, and we're back above 0.60, which is the kind of critical psychological level. And you can see that we've actually pulled out of oversold on this monthly chart as well. So last few times that we've held above the weekly level, we've had quite obviously big moves higher. So potentially chance for a bit of a big snapback here in the Aussie. RSI always tricky to watch, because when the price was down here, the RSI was actually oversold. But now that it's closed higher, the RSI is moved back out of that level. So it'd be interesting to see how we finish this month, whether in fact we crack back down again and finish oversold, or whether we actually hold it or not. So then down to our shorter time frames, and you can see that actually this was the sharp move lower, and we have been making some progress here. So we didn't even make a double bottom, haven't really challenged that low yet. Managed to take out this previous peak, pulled back. We've rallied to the top side, rallied through that. We've had a little bit of congestion from these previous lows here, but we've rallied up, found some resistance so far at 0.62, pulled back to that previous peak, and the 50-day moving average on the 4-hour time frame. And so far it's looking good for a move through 62. And then we're challenging 63, which is where we had this previous big area of support in the past, which could become resistance. And then we have this previous low here. You can see it from the daily time frames. That's around 64.50. They could be areas where this reversal runs into trouble. But for the moment, the uptrend looking good. But look potentially for 63 for if we see some sort of push higher, a pullback, a test, and then roll over. So that already could be happening at 62. And if we move back through these lows here, look for this trend to basically have reversed and for us to push lower again. For the time being, we're looking good. We're looking for a retest of first 63, then 64.50. Over to the loonie. Again, just to get our context here, we challenged this huge high over here from 2015. Didn't quite get to it, reversed back. So again, it was the dollar strengthening hugely, and then suddenly pulling back the week after, and now we're into this week, and the dollar is gaining a bit. But you could almost say that the Canadian dollar looking quite resilient, given how badly oil prices are doing. We'll look at those in just a minute. So obviously a huge uptrend on a weekly basis that's run into some big long-term support, long-term resistance. So potentially that resistance has capped this uptrend, but we can move down to our shorter time frame to get a feeling for where we are. This was the big rally up, hit that resistance, so saw quite a big pullback, came down to 41.50. That wasn't quite enough. We've gone in for another leg lower, and the way we're viewing this, the way I'm viewing this, is that probably 140, the big round number, has kind of capped this decline, and that now we've moved up through this. You see it was support, it was resistance, we've moved up through that resistance. Suggests to me that we're above the moving average now on the 4-hour time frame, and that we're going to push more to the top side up to test this 143.50 level, which was these lows through here. This sort of thing would be our next target to the top side. And again, we kind of reassess at that point. If we can get through 143, then we're looking for a re-challenge of those big peaks up there, with this one as an interim resistance. So now switching gears to commodity markets, let's have a look at gold. So another huge snapback in gold. So we came back and obviously challenged this big support level through here, but didn't get through it. So gold held on to its low. So we had the big, if we just recap a bit, that was the big resistance. We rallied up through, pulled back to 1450. 14's here, around sort of 1370 as the breakout level. And we held 1450. We didn't even get to 14. And we've had a massive rally up from there. And so we want to see whether this rally is sustainable, but it certainly looks it at the moment. And interesting here that actually we put in quite a nice double bottom. So obviously two matching lows there. Broke the neckline and almost perfectly reached the upside target from that double bottom target, from that double bottom pattern. So running into a bit of resistance at this previous support, turned into resistance twice here. This looks more to me like a continuation pattern where we'd break to the top side than a reversal. But if we do take out this support through here at just under 1600, 1600 being the big one, and then the 1595 is these lows through here. I think if we drop through there, then we're probably heading back down to 1550, and this head and shoulders neckline again for a retest. But as I say, it looks like continuation pattern, and then that would suggest a re-challenge of the big 1700 level that we got to before. Okay, switching gears to the oil market. As I mentioned, they were very weak. The headlines this week were that we got a new 18-year low in the WTI crude price. You know, oftentimes I will look at Brent crude. Oftentimes I'll look at Brent crude as the major market for as the international benchmark for oil. WTI a bit more focused on US markets, but nonetheless it was interesting to see that actually WTI did on some measures drop through $20 a barrel. If we have a look on our chart, we can see it just about held on to 2060 on our pricing, but nonetheless a big level down at $20, a big area of just natural psychological support. So then the question remains, are we about to put in a low there? Well, the RSI suggests we could on this 4-hour chart. We've put 3 lows in, and we're starting to get some kind of positive bullish divergence off the lows here. So that's a bullish sign. I wouldn't be looking to get positive on this market until we push beyond 26, which is roughly these highs through here. And interesting, of course, that pretty sure this was on my chart, but somehow it's made it off. This was our big previous low, obviously, and then if we do it down to our 4-hour chart, that indeed is the area that we were just talking about there, right? The 25 level was that big previous low on the weekly chart. So That's our big previous area of support. If we can, so we dropped through it. If we could break back above on those shorter time frames, that's quite significant, and we could be in for a big rally in oil if we can do so. If we can't, I mean, initially we'd probably be looking for some short positions up in around this area, because that would be a natural area to sell given the significance of this level. But there are some indications that we could actually see some top side. And then we'd start targeting, there's lots of resistance on the way. First one would be through here. But if we can get through 28 roughly, then we're starting to look up at 33s, 34s, this previous peak here and the bottom of this big gap that we had, if you remember when the Russians and the Saudis started the big price war. And last but not least, the stock market. Again, let's get our big picture. We can see that this was our consolidation period in 2015. We didn't quite get through to these peaks, but this little peak here was pretty nicely where we stopped around 2200. And we've had a big rally up here. Technically speaking, we're actually in a bull market. Given the strength of that rally off the lows, we rallied 20% up off the lows. I don't put too much stock in that. But nonetheless, the price moves are looking quite constructive at the moment. So you can see, obviously making lower lows and lower highs. We broke up from this high here. We made a higher low. Found some resistance at these two peaks here, pulled back but held on to the support, rallied up again. Pulled back through this support, so not a really not strong enough to kind of use this resistance as support and rally up. We did pull back further, but we held on to the previous low, so still technically an uptrend going on here, and we're back up to the resistance again. I'll be looking at 2700 as a big round number, and then you can see based on our weekly chart, it's these two big lows through here, which did not offer any support where markets were crashing, but potentially could offer some resistance on this pullback here. So I'll be watching that 2700 and just above where these two lows were. And those two lows come in right around 2720 as potentially where the market could start to roll over again. But for the time being, we're making high highs and high lows. Looks good, but just looking at that 27 area as a potential resistance where we could turn lower. If we can break through it successfully, then it would suggest we're off to the races and looking to challenge the next areas of support and resistance would naturally be these areas through here, which you could call the 2850s. So first looking to challenge 27, 2850 could be the next topside target after that. Okay, thank you very much for attending the webinar. And again, if you are getting some good use out of these, please click that subscribe button wherever you're watching this, and look out for our video again at the same time next week. Good luck trading, everyone.